You walk into a bank, hand over your paycheck, and walk out. The next morning, you check your account. Same balance. Nothing changed. Or did it? Because while you slept, your money didn't just sit there. It moved. It multiplied. It disappeared. And here's the unsettling truth. Most people have no idea what really happens to their money overnight. By the end of this video, you'll see your bank account in a completely different light and maybe wonder if the number on the screen is truly yours. Why should you care about what happens to money overnight? Because your money is not just money. It's a tool, a weapon, and a secret player in a massive system. Every day, trillions of dollars are shuffled, lent, borrowed, and multiplied behind the scenes. Banks aren't museums for your cash. They're engines of profit, engines that quietly turn your deposits into more money for them, sometimes at your expense. And the more you understand this system, the more you see how fragile and sometimes absurd it really is. To most people, money in a bank feels static, safe. But the reality, it's anything but. It's alive, and it's working harder than you are, just not for you. How your deposit becomes leverage. Let's start simple. You deposit $1,000 into your checking account. You think it's just sitting there, but banks are legally allowed to lend out a large portion of it, roughly 90%, while keeping just a fraction in reserve. Your $1,000 can instantly turn into $900 loaned to someone else. That borrower spends it, and it lands in another account. That new bank can then lend out 90% of that, $810, and so on. This is called fractional reserve banking. It's how modern finance creates credit, and by extension, money itself. Now, imagine this happening millions of times across the banking system overnight. Your single deposit is actively multiplying in ways most people can't even picture. Even more, banks then participate in the overnight interbank lending market, or the federal funds market. They lend to each other to meet regulatory requirements, sometimes at eye-watering interest rates. All this movement happens while you sleep. The hidden profit engine. Here's the uncomfortable math. Your $1,000 might earn you $0.05 in interest per day. But the bank, from lending, fees, and overnight trades, could earn $5, $50, or more. The system is engineered to reward the institution, not the individual depositor. And yes, it works beautifully, until it doesn't. Banks are betting that borrowers will pay back and that other banks will honor their side of the chain. One slip, one default, and the whole delicate web can start to unravel. This is not hypothetical. In 2008, overnight lending markets froze. Banks stopped trusting each other. The dominoes fell, and your money, though insured, was part of the system teetering on the edge of collapse. Inflation's quiet theft. Even when everything works perfectly, there's another thief lurking: inflation. While your deposit circulates and generates profit for others, the real value of your money quietly erodes. Prices creep up. Your $1,000 buys slightly less tomorrow than it does today. Meanwhile, the bank's profits are untouched. The borrowers are using your money, and the system hums along as if nothing happened. The irony, the safest, most static money doing nothing, is often the only money that truly retains its nominal value, though it loses purchasing power slowly. Hype versus reality. You've heard it before. Keep your money in a bank. It's safe. And in one sense, yes, banks are regulated, insured, and protected. Your nominal balance is protected. But safe doesn't mean profitable, shielded from erosion, or even truly under your control. Reality, the moment your money enters the system, it's working for someone else. Banks love your deposits. They multiply them, leverage them, and make massive profits. You get, well, your tiny interest payment. It's systemic, not personal, but it's easy to miss if you only glance at your bank balance once a day.
Zoom out. Bigger picture. Now imagine this at a global scale. Every deposit, every checking account, every overnight loan, trillions of dollars moving invisibly. Your deposit is part of a massive network of leverage and liquidity, humming every night. The system creates incredible economic activity, but also fragility. Small shocks can ripple instantly across the globe. Overnight lending crises can become national headlines in days. Interest rates, housing markets, inflation, your daily life is connected to this invisible flow. Your money is far from neutral. It's a cog in a global machine that can generate wealth or risk while you sleep. Consider this: a small regional bank once lent overnight to a hedge fund it barely knew. The fund defaulted. Within hours, the bank had to borrow from other banks at high-sky rates just to stay afloat. All the while, individual depositors stared at their screens, seeing their balances intact, unaware that the system behind them was trembling. Or the fact that billions of dollars of deposits sit idle in checking accounts, but banks are secretly making hundreds of times that amount in profit by moving it around overnight. It's absurd. It's almost poetic. Your money is safe, but only if the system survives, and only if you ignore the invisible drama happening behind the numbers. So, what happens to your money while it sits in a bank overnight? It moves, it multiplies, it fuels profits. It quietly loses value, and sometimes it becomes part of a fragile web that could collapse. The balance on your screen is just a number, but the reality behind it, complex, dynamic, and almost entirely out of your control. And maybe the real question isn't how much money you have, it's how much control you truly have over it. Because while you slept, your money worked, and the truth is, it wasn't entirely working for you.
Enjoyed this video? Like, subscribe, and hit the bell to level up your money game with Monetary Mentor.